the country's kind of like mountains on the west, flatlands on the east. So if you like any type
Mm.
of health hiking, I mean, it depends on how you want to live. You live your life. If you're in the east, you spend a lot of time like you know more like boating. Kind of like parks. Everything's flatland, so you're kind of like a normal type scenario. When you go out to the
Mm.
west, you have a shitload of like obviously you heard of the Grand Canyon. We have the mountains out here, massive mountains, so you can cater your life to like hiking, better health. So there's a lot more activities that you can get into out here. All right, let me see.
Yeah, I would like to go see the Yosemite and those
Yeah.
places.
Oh yeah, 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 yeah.
Looks like
That's yeah. The views are incredible.
yeah.
All right, so let's see here. Let me. Obviously, we're in that Doge short right now. All right, so let me see here. Where to start on this? All right, I'm gonna share this screen here. All right, so what? So let's go with the basics. Where I think a lot of people, um, I think what we have to do is have some type of like, and this is why you've seen the difference in the training and what we've been teaching is that it's like the fundamentals come down to where everybody has a beginning they can look at and kind of like have the same thing. So I'd say about 98% of traders, probably 99, all probably about I'd say 99, all use a very simple system called support and resistance. And that's kind of like uh, the basics. So make sure when you hop inside the Discord, guys, you go ahead and make sure you mute your mic if you're not talking. All right, so let's go in here and like see what we have, and I'm gonna double check this just to make sure we're streaming. All right, we're streaming. We good? Perfect. All right. I will slide this a little bit right there. Right there. All right, there we go. Doge is active. Perfect. Okay. Mm, I'm just watching Doge right now because we're in that short, but it also looks like it wants to do a little bit of bouncing for a second here. So we're just taking profits. All right. So the basics is, starting off is always uh, the support and resistance, right? So have you looked at any of that?
Yeah, yeah, yeah. I've seen some old movies from you with how to set your points and set your stops and
Yeah.
whatnot.
Yeah.
What
So,
about what about Soul now? What about Soul now? You see, that's the resistance right there
oh, you
on
mean
the
on Doge right
futures.
here?
On Soul, Solana.
Oh, Solana. Okay, let me take a look at Solana. And this is kind of so. This is what I want. You see my screen right now, right? So,
Yeah,
kind
yeah.
of what everybody. This is what I was trying to explain to people, like, because there's a lot. Now, earlier the other day, I posted these yellow arrows, where I said we were looking for a pull down and a bounce, right? And that
Mm.
was all based off of at that time, I think I had a 30-minute pendant. Yeah, it was like yeah, here it is. And this is where people, when people trade patterns, right? Um, you can see right here, there's a bullish pattern right here. And there's a bullish pennant, right? So a lot of people, when you get a pennant, anything like that, people always look for that and this is just a channel, right? Top of a channel, bottom of a channel. It's just support and resistance. And really what a pennant is, it's just a slight variation of the support line heading up so that you can start to see where a coin starts to show that it's what they call lower lows or higher lows. You know what I mean? Like it starts to bounce, right? And these areas, this is a lot of times people are like, all right, this is our, our area um, of support. This area here. Change this to white. There we go. And then what happens is it bounces and it gets a little bit of support. And then on the third time, it shows that it's a little bit higher, right? So that's where they start to see the pennant, and they're like, all right, so eventually it's going to bounce off this pennant, and it's going to create, some type of upward movement. But yesterday, you guys can see that I posted that we were going to go down first, right? And the reason why is because, I don't know how many people. TikTok, what up, man? TikTok, if you're inside the chat, do you know what a bullish pennant is? Hit ones in the chat if you know what a bullish pennant is. All right, don't forget to follow, guys. Don't forget to share the live. Put the live out there, share the live. So a lot of times, there's strategies and there's systems out there, right? And a lot of people use a thing called support and resistance, like I said, and then a lot of people inside of support and resistance use a thing called like patterns, right? And the reason why I don't use patterns in the typical way is because patterns basically they only work about 60% of the time. So when you have that type of scenario, it's a lot of time it's just people, for one, people don't know a lot of times they how to actually draw an actual pennant or a bull flag. A lot of times they're just kind of like guessing at it. There's not really actually what's happening at that time. And so that's one way that you can get yourself into trouble when you're trying to like trade a pennant or something like that, right? Or what they call, any of these scenarios where they're basically setting you up to do what are these called? So a pattern, right? This is why those patterns you don't want to fall in love with patterns. I know a lot of guys will do pattern trading, and you just have to be in a scenario where you're realizing that patterns are not really that great. You know what I mean? So we want to use patterns in a way that we recognize something's happening, but then to adjust to it. Let me see here. And I'm just setting up a few things here. All right, guys, welcome in. If you're in TikTok land, man, go ahead and don't forget to share the live, and we'll be talking back and forth as we go. All right, so here we have a bullish pennant, which turns into a huge dip, right? A huge fall. And I called out a short on the pennant because, 50-50 most of the time it's going to go a certain direction. So just like anything, we have to have a scenario where we have some type of confirmation, right? Something that tells us, at this point, we're in a situation that we're going to go a certain direction, right? And the reason why I'm going over that is because at the end of the day, it systems or like, the systems that you trade, whether they're support, resistance, patterns, you have to have something that tells you the difference between when it works and when it doesn't work. Yo, what up, TikTok? Welcome to the live, guys. We're going to go over some charts today. Right now, we're looking at a bullish pennant on Doge that ended up being a massive short for us, which we're in and we took advantage of yesterday as well. Made a lot of money on that. But the difference in trading is finding a system, right, that you can use. And then what you need to do is once you have a system is then you implement confirmation, right? And that's why we use our moon indicator to confirm what we're seeing. So this way you guys can have a lot of different scenarios where if you see a pattern or what most people like to use, which is support and resistance, you can turn around and like decide whether or see when that's actually going to be something that's going to happen, right, or be more um, close to what it's supposed to be, right? So, and now that's on a 30-minute pennant. So you said on Solana, right? So let's go take a look at Solana.
Yeah, we've been trading Solana so much lately, so I was just thinking, okay,
Yeah,
maybe
yeah,
I
yeah,
should try
yeah,
that
yeah. I
one.
mean,
Before I was trading Axe or something.
yeah.
Axe, I like that one.
So now, normally when you set up something, right, you're gonna do a support and resistance. Always starts on a 4 hour, okay, and 4 hours are normally the best ones to kind of like set yourself up, just so you can see the previous time, right? And out there, a lot of you guys will see like guys will be talking. I guess some of the I don't know which most of the influencers out there, which I'm going to start doing, is going over their information. What they're showing you, so that way you can kind of see the difference in how to like actually know. So you can see here we have some support and resistance. We have this huge line here that we're actually hitting right now for Solana, which is going to be the 126 zone, right? You can see way back here we've hit Solana here, we've hit it here, we've hit it here, we've hit it here, we've hit it here. So this is a massive support zone, right? So we can see that on the 4 hour. This is massive right here. So the one thing we know for sure is that there's going to be some resistance there, right? Now, what people have to learn to understand is that when you see bounces that are coming off of supports, right? It's typical. It's going to happen because you have to keep reminding yourself like, why, what, how is this game played, right? This is more about mentality, right? Once you understand what's happening, then you can dissect and come up with the strategy that you need to execute, right? So the reason why you see bounces is because 99.9% of people are buying support zones, right? This is where they're putting their limit orders, their buys. So there's going to be bounces off of there. So those are things that you have to especially when you're shorting, you have to take profits off of support zones simply because it's going to bounce, right? And a bounce is uncontrollable. You never know how many people have been putting limit orders on certain areas over the last week, 2 weeks. It all depends on how long this support is. The support that we're hitting right now, this support actually was created originally way back on June 25th. I'm sorry, June 23rd, right? So where are we 6 months later? So it's 5 months later, we're back at that support, right? And a lot of people, if you're trading with, 30, 40, $50,000, you're not really in a hurry. You know that if you missed the bounce and you didn't get your bounce or whatever, and you're seeing this, the market cycle of holiday pullback where people sell off, you know that you're going to hit supports. So if a guy's sitting around with 50,000, 100,000, 200,000, a lot of guys with big money out here, this is the support zone that we'll put money on, right? Because it's probably going to come back here. And this also lets you kind of see it throughout the bounces. You can see how much money is actually out there. So right here we get our first bounce, right? And that first bounce kind of lets us know, it's kind of like, the teaser, right? So you'll see the first bounce hits right here. And that bounce just basically gets eaten up, and you can see that big move, and you can see where other people who were making sure they didn't miss the support line. Their support zone was a little bit higher, so you can see when it first hit that support area, we had a nice little bounce. I mean, this bounce here was about 10%, right? And normally, what that's going to create, remember, like when you're dealing with the mentality of investors, big time investors, or hedge funds, and professional investors, right? Guys that are sitting there, making the trades for the hedge funds, the ETFs, et cetera, et cetera. They're always going to be looking for 10% margins, right? Because they use what's called leverage, the same thing we use, but they use it on a lower scale. They use it at like 3%, right? So a 10% move is equal to 30% for them, right? That's their goal. Their goal is to, if they got, a million, two, three, four, $5 million into a pot, if they can get 30% on that move, that's an entire year, right? Because normally, if you're a hedge fund, your goal for your client is to give them 7 to 8% returns, right? 10%. And when you have a crypto scenario where you're a crypto trader, most times the returns that you're looking for on crypto is about 20% a year, right? Double the NASDAQ. So what they do is they basically play odds, meaning that if they're constantly trading to a 3% margin and their goal is to get, the entire 20% or the money, they're trying to get it in one simple trade, and then every time they repeat that trade, that's just them, insure, like packing you a suitcase. So if you gave them $100,000, right, and this is kind of things that we do here. If, let's say, you have $100,000 and you said, hey, yo, VC, what are returns on, my $100,000? And we'll tell you, like, hey, man, if you do the Nasdaq, you're going to get 10%. If you do crypto, you'll get 20%, right? Because the game of crypto is constant trading, and it's all year round, right? You win some, you lose some. The majority of people lose about uh, 8 out of 10 trades. If you watch professional traders, their goal is to win, 4 out of 10. 6 out of 10, that means they're above their average, right? Where if you've been around me, we're more about, explaining, teaching you how to, win 4 out of 10 but be profitable, because that's a normal trading style that, most people do. So you have to have that in your bag, right? You got to be able to lose, 6 out of 10 trades and still make money while you're learning the game, right? And we teach a little bit different, to where we're more like, um, we want to see, just personally, I want to see a more profitable situation. I want to win, 7 out of 10, right? I always want to, the reason, how we develop our systems is that we always want to be where we double the national average, right? And that's what allows us to kind of stay ahead of the game, is just by always being, doubling what most people are doing out there. And that makes it, what that does for everyone is simple, is that it creates the element of, if you can do, it's called the 50-50 rule, right? You can do half of what is expected and be highly successful. And if you can do half of that and still be successful, well, then that's the strategy that you want to follow. So, guys, if you're in TikTok right now, hit ones in the chat if you understand what I'm saying. Right? Who's that? George John. Those who can't teach. Well, George, I love the metaphors. Those are great. But sometimes, um, you have to understand the metaphor, right? And we'll get in that. That's a personal one-on-one conversation. I can teach you to be a better person, but yeah, most of the time, those who can't teach. But here, we actually do, and then we show. So those who do show, and that's what we do. So what we're doing here is, we already made these trades. We're actually in these trades. We already get paid from the trades, and then we just show people how we made the trade. So this is where um, understanding strategies and so forth, right? So hit ones in the chat, guys, in TikTok if you guys are learning how to trade. If this is your first time trade. George John, he said, "I love your response, man. God bless." Yeah, I mean, George, George, this is for you, man. You ever heard of the owl that lived in the oak? George, you ever heard of the owl that lived in the oak? This is my favorite. This is what you got to live by, man. You want to change your life, right? So there once was an owl that lived in an oak. The more he heard, the less he spoke. The less he spoke, the more he heard. Now I hope George can be like that wise old bird. So once we have a strategy, right? We have all these strategies out here, but we got to find a strategy that basically can be successful, even if it's 50% and 50% of that, right? Because you gotta always put into the perspective that you're not going to be perfect at what you're doing, but you have to be successful at what you're doing. That makes sense. So on support and resistance, right? This is why we focus on support and resistance. Is because this is what everyone's doing. 99.9% of people are going to go out here and they're going to set up support and resistance, right? So I'm going to throw these orange lines up here, and these are just going to be on the 4-hour, right? So you'll see your favorite influencers if they're, I don't know if you guys, how many people watch, I forgot her name. There's a couple women out there that use support and resistance. Who else, guys? TikTok. Who else do you watch that shows support and resistance? All right, so then we're going to see another line here of support and resistance, and another line of support and resistance. And so those are 3 lines there. So a lot of times you want to see, 3 major lines from the very bottom, a middle, and then the upper one, and then your 4th one is normally where you're trading inside the madness, which would have been somewhere around here. Okay, so those are our 4 lines of support and resistance, right? Now, the question is that if everybody's trading the same support and resistance, right, then that there's always going to be a bounce on a support line. So if you're a person who's like, I don't know when to take profits. Like I see people say that all the time. Like, I don't know when to take profits. Well, there's a thing called channel trading, right, which we call cluster trading, right? Um, and so what that basically means is, how many indicators is that? So George, right now I've got um, I've got a Fibonacci indicator. I've got a trend tracker that we created. Um, and then we got some moon indicators, which we'll show in a little bit. But right now on the chart, there's only 2 indicators right now. There's a trend tracker that we have and a Fibonacci. And so right now what we're doing is we're just focusing on what everyone's doing, which is simply support and resistance, right? So guys, who do you watch on TikTok that does support and resistance? I think there's a dude, Kevin Hill. There's a guy who does that on there, Calvin Hill, something like that. But everybody trades support and resistance. So once you have your 4 lines, right? You have your bottom support, your middle, your upper, and then you set that up. That's normally what you're going to be trading, right? Now we trade what's called clusters. Clusters are basically when a trade is hitting a support and a resistance line over and over, and that cluster has to produce a percentage in between the top and the bottom that is valuable to us that we can trade. Meaning that if there's a what's our percentage, right? We always want to trade a cluster when it's at least 1.5%. The reason why is because if a cluster is moving from top to bottom, you need a 1.5%, because if it does half, right? Remember, 50% of what it's supposed to do, that we know that we're going to get a 0.75% move, right? Which means about a 0.5%. So once we have that 0.5% in our mind, and we know that if we do get into a trade and it starts to go the other direction, it'll move at least a 0.5% in the direction we thought it was going to go. And based on that, we can trade the percentile, or what's called the leverage, right? Or the multiplier on what you can use, right? So for instance, if we were trading a channel, right? Kind of like here is I'll use these support and resistance. So this area right here, in this support and resistance area here, top to bottom on this area is about 10%, right? Which means that if a coin came down and hit that support, so let's say it came down, hit that support, and then it bounced, we would expect it to go up to at least 10%, right? Which means if it does half of that, right, we would at least get a percentile that's about 5%, right? And so that allows us to kind of understand the philosophy of like, okay, how do I make money here, right? Well, if you're trading support and resistance, you would expect it to hit that line, bounce up, and then go back to the resistance that it just left, right? So for instance, if you look back on the chart here, you see like where we start to see the decline over here. And I'll show you based on what Solana just did, and you'll see where we were kind of marking it up here, but let's back up here. And you see all these arrows here that we were looking at right here. You see those yellow arrows? So basically, what we were looking at here is the top one became resistance, and then the bottom one here is the main support, and then in between these two channels here, these bigger channels, you see what I'm saying there, brother? Can you see that, TikTok? You see these two different channels here? I'm going to make these channels, since we're looking at these live, I'm going to turn these yellow, so you can see the ones that I'm actually talking about. So these two channels here is the top resistance, and then the bottom resistance, right? I'll keep that one orange. And then the channel itself becomes the channel of the current cluster. All right, and this is what we call cluster trading. You see up here? So now, if we're looking back at our 4-hour, right, which we are, we can see that we have a support and resistance line that's down here, right? But during the cluster, we can see that we've had this go up and down and hit these areas multiple times, right? You see that? You see that little cluster right there?
Yeah.
Now, there's no big support or resistance in that area. It just happens to be when we reach an area of exhaustion, meaning that there's been a big push, right? You can see from this area here that there's a big push here. And then it peaked out, and people started to sell, and then once it found support, it bounced, right? And now we have an area that is now considered support and resistance, because this is where people, right? You can see the first area here creates support. In order to make sure that's correct, and this is the first area that creates resistance. And then it happens again where it gets resistance, and then it shows support, you see? Now, what most people would expect to happen here is from this area here, you would expect it to basically do what it normally is going to do, which is bounce up and create a movement to the upside here, you see? And if we measured this, we'd say, well, from this area, after what it's already done, it's created support and resistance, we're looking at a movement here. If it bounces off of this area and bounces back up, of around 3%, right? You see that?
Mm.
So now you have a system that has given you a strategy, and this strategy is called cluster trading, right? We call it cluster trading is when, the channel, it's also called channel trading, right? And channel trading is just basically when there's a continuance of people deciding that they're going to sell when it gets to $234 and they're going to buy when it gets to $227. These are the top and bottoms of this cluster, right? Top of this cluster is 234. Bottom of the cluster is, and I'll make these a little bit bigger for y'all. Right. So that's top and bottom of the cluster, right? 234 is the top, 227 is the bottom, right? So this is a strategy called cluster trading. So guys, if you're in TikTok, hit ones in the chat if you understand what I'm saying. This is a cluster trading on the 4 hour. It's also, while you're tracking support and resistance, it allows you to understand what you can trade. So when people are like, I don't know, what direction this is going, or, I don't know, what's happening. This is, or sometimes people get into a trade too early and they're trading the wrong direction. Like they'll get into the middle of this going up and then it'll keep going down and then they'll sell and then it bounces and they're like, oh, I was right. And then they buy back in and it goes up a little bit and then it dumps again and they're like, what the hell? And then it bounces up again and you get caught on the wrong side of these bounces. And the reason why you keep trading and you keep losing more money is because what you think is supposed to happen happens. It just happens at the wrong time. That makes sense?
Yeah.
And if you don't understand how to find the cluster or to find what's happening, don't forget, guys, if you are in the TikTok, please share the live. Don't forget to hit the likes. We need about 10,000 likes. We want to get to 100,000 over the next hour. Share the live, guys, so we can get more people up in here. And we can go over strategies and coins and so forth. So once you understand the game, right? So the first part of it is understanding how the game is played, right? What's happening? What is the what's called the law of average? The law of average means that something happens over and over every time you do it. So it's like when you flip a coin, it will land on heads, 6 out of 10 times. That's the law of average, right? Or whatever you do. Every time if you do the same thing and you repeat the same exact steps over and over and over, the law of average is what you do. Let's say if you were pouring a water bottle from one water bottle to another, and you did it 10 times in a row, and you spilt twice, and you did it 10 times in a row, and you spilt 3 times. You did it 10 times in a row, and you spilt twice. Your average would be about 2.5% of the time you'll spill. Right? Does that make sense? So you want to find a situation where the law of average is in your favor, right? Meaning that it does something more than it does something else on average, right? Very simple. So in a cluster trade, you're always going to have a top, which then creates the resistance, a bottom, which is support, and then most of the time, once that happens and it starts to bounce, if it rejects the resistance again and then hits the support again, it will go in that direction at least 2 more times on the law of average. Right? So normally there's 5 up and downs that happen in a cluster. And after the 5 up and downs, that is where people decide whether they want to, believe in the support and buy more, or it's exhausted and there's no more money to buy, which is 80% of the time when you're in a cluster, it will go down first. And the reason why is because the people who bought early and got the money off that first pump, their entire goal was to make profit. So if they see their profit go up and then come down and then go up and then break even, like you were saying, so let's say their original profit was $100 and it pulls back 20%, and they go down to $90, and then it bounces back to $100, and then it goes back to $90, and it goes back to $100, right? In their mind, they're like, oh, there's no more money here. I'm going to take the next time it goes to 100. If it doesn't get to anything above that, it starts to go down, I'm selling. And then it'll come down and it'll go up to 105, and then it'll start coming down and they'll sell because they've realized that it can't break above the cluster. Does that make sense?
Yeah.
So this is where you have to understand basic, human trading. So TikTok, if that makes sense, hit ones in the chat. Hit ones in the chat if that makes sense. And like I said, guys, the lessons that we're doing today, we're gonna hop on here today. This is not for everybody. I don't really, I love everyone and I wish you guys success in your life, but trading might not be the way that you are successful, right? Trading's very successful for me because it's very logical and it's very systematic, and I am a mathematical, systematic individual. So, to me, I created a system that allows me to make a lot of money trading, and it's very easy to understand. Some of you guys, it's not for everybody. So, I mean, if you found your way here, good luck, God bless. Obviously, this is a great day, good times, paying it forward. So, if God put you here today, hit ones in the chat and learn something today, and it'll help you down the road, whether you start trading now, next year, or in 3 years. If you go, man, that's what VC was talking about 3 years ago, right? So when you have a system and you understand the averages and you understand why things are happening and the probability of what's going to happen, then you will get yourself in a situation where you can make a decision and say, okay, this is going to happen, right? And most of the time, it's going to go with the law of average. It's going to go with human behavior, right? So we know that once we're in a cluster, we're going to get about 5 cluster trades, right? And as you get better at this, you'll be able to determine, instead of, so right now, this is like normal trading, right? And the reason why I'm covering this is because what I want to cover is the mentality and the trading mentality of 98% of the traders, so that you can understand the people you're trading with, what they're trying to do, their system, and their strategy. Okay? And everyone's on the same system, and most people are using the same strategy. What we teach you is how to make the strategy more favorable, more in the law of average of winning than losing, right? But right now, I just want to cover the basis of how to understand what's going on. So now that we have a cluster, right? This is our cluster trade. And I'll put this in here, cluster. Law of average 5 times. Okay. Now, once we got that kind of in there, this is our cluster trade right here. Then we have our support, right? Don't forget, remember down here, we had our orange support line, remember? Our 4-hour support. Now notice that once it broke through the cluster, right? And we can see right here, once that we broke through the cluster, right, it hit its final top, and then right here, it broke through the cluster, right? Now, when it breaks through that cluster, then it creates where it heads, right? So once it breaks through the cluster, where does it go? It goes right here, which happens to be what? The support and resistance. See that? Now, why it bounces, okay? The reason it bounces here, and people are like, man, look at this huge bounce, right? And people are like, why didn't it bounce earlier, right? It's like all these things they try to understand. It's very simple. Is that during the top of this cluster, right, while it was going up and down, better traders or traders that have a different strategy, right? Hold on one second. Bloop. Traders that are a little better or have a better strategy, right? Don't forget, guys, we need to Share the live. Thanks for liking the live, brother. Don't forget, guys, share the live, and don't forget to like the live. We got to get up to 100,000 while we're here. So once you understand what's going on there, better traders who are kind of like watching the up and down go on, what they do is they decide that, what they're going to do is say, you know what, I don't want to get caught in the middle of this up and down trade. You know what I'm saying? And they just simply do the thing that the smart thing to do, or the we'll say the better. You're like we always talk about, be a greedy trader. So what they do here is they make the decision that, okay, I'm at work. I see Solana had a big move up. So what I'm going to do here is I'm not going to fight with the up and down. I'm going to just go down to the next support, which is down here. And on that support, I'm simply going to place my limit order. So now, we'll clone this. So now the support becomes a buy at this lower level at 218. You see that? So then all these people that were watching the top, right, because they don't chase, right? So you know how we always talk about there's three moves. There's the first move up, right? We always have the move up. Then there's always a what? A move down. And after the move down, there's the next move up, right? So there's always three moves that happen, okay? So here they had their move up. This is the move down, and then the next move up. Now, if you're a person who uses Elliott waves, right, you know that Elliott waves normally is going to give you a target where it should bounce and then return back to at least the last high, which at this point would be the 234 area. You see what I'm saying? That is normally a lot of people's targets, because normally on an Elliott wave 3, what it's going to do, it's going to bounce and it's going to go back up to at least the last previous high, and then from there it basically can fall from that area. Or what most people do is that normally the third wave is the highest, right? And how you can tell an Elliott wave, right, just so you guys understand, is that when something starts to run, normally from the top of where it ran, this is 20%, it can pull back to at least 50%, which would be here. You see how that lined up? All right, so you see how this ran down here. Discord, if you're in the Discord, you can answer, guys. So you see down.
Yes.
Yeah, you're good. So here we have the support line down here, right? And once it runs from the support line, we can see that the big run ended up going up here, and it reached about a 19% move. You see that, right? So on an Elliott wave, it normally pulls back 50 to 70%. So if we go back 10%, right, which is about here, what does that bring you to? That brings you to the next support, right? So we started here, we bounced to here, which was up here, and then the pullback came halfway down, which is here. So we had a move from the bottom, wave 1. Wave 2 was a perfect 50% pullback, and then wave 3, right, would be back to its original, right? Which it didn't fully make its wave 3, but it made its wave 1 and 2. And this is where, this is why I try to teach you guys, understanding patterns and understanding, Elliott waves and understanding support and resistance. They're all great to know as systems and then strategies. But the difference in making money in trading, right? Because 95% of people lose in trading. It's not because, and this is the beautiful thing about it, right? People keep coming to trading and they lose more money in trading than anything out there. It's not they because it's hard, right? It's because it trading will do what you thought it would do 50 to 60% of the time, which basically makes you believe that you know what you're doing. Because patterns average about 60% average. So, and the reason why there's a thing, that's why I call it the 50-50 rule, is because based on human behavior, if someone can feel that they're slightly more successful, or they're more successful than failure, they will continue to try because they believe they can crack the code, right? So if you can get, 6 things right every 10 times, you're going to believe that you know what you're doing and you just need to figure out how to make money on it, right? That's why you see Elliott waves, right? The Elliott wave is wave 1, wave 2, which it worked, and wave 3 is considered the best wave because the majority of people who are waiting to trade, they wait for what's called confirmation. And confirmation is simply when something happens in a pattern that shows that on the law of average that 6 or even 7 out of 10 times it's going to repeat a pattern, right? And Elliott waves, normally once you have a breakout, most people, if you listen to anyone out there, once you see a breakout, what do they tell you to buy? Buy the retest, right?
Mhm.
And then what everybody talks about, when you see a breakout candle, what do? You buy the retest.
Oh, usually I buy there and it go down again.
Yeah. And the reason why is because you're trading. So your strategy is when you see the breakout happening, you want to jump on the momentum.
I guess it's an impulse for me. I fuck up sometimes in that area.
Yeah, and
Goes
that
up and I think, okay, this is what I've been waiting for, and after that it goes down.
right, and you're not wrong because after it goes down and you're out of the trade, what happens?
Yeah, it goes up.
Yeah, it goes up. So you're not. That's the thing about trading is that you're not wrong. You just have bad timing, right?
Mhm.
So this
Yeah.
is something as the mentality of a trader. What you got to do is you got to say to yourself, which is it seems to be the hardest fucking thing in the world, right? Some guys used to joke and say, "Hey, yo, VC, I I lose all my money all the time," and I'm like, okay. And to me, I don't even want to teach him anything. I just want to say this. Here's what I want you to do. I want you to go in there, and then when you're about to make a trade, I want you to make the opposite trade. Like, don't learn
Yeah.
anything. Don't. You've already mastered how to lose, right? I mean, think about this. Listen how logical this shit is. If you are a terrible trader, and every time you trade, you lose money, you've already mastered the ability to suck at trading. So all you have to do to be successful is to do the opposite of what you think, and you'll be the most
Yeah.
successful trader. Isn't that crazy?
Yeah. Actually, I tried that sometimes before. I
How'd it
yeah.
go?
I think I got some.
Yeah. And
Yeah.
that's because it's like, that people don't realize that what you're doing when you're trading, the reason why you're losing so much is because you're like you're not going with the majority of people of the basics, and you're going against the basics. But your keen ability to go against the basic is actually profitable. Like, when you think something's going to happen, just do the opposite and see how many times you actually win right? Because if you can win 6 out of 10 trades trading against what you think is going to happen, all you have to do is figure out how to use levers to make that more profitable for you, right? Limit your losses, increase your wins, right? It's the same philosophy that we teach. It would just be like, okay, out of your ten trades that you made, how much did you go negative? How much did it go positive, right? And all you really do is work on limiting your losses and increasing your wins, right? And you're successful. That's a successful trader, right? People don't look at it like they think they're trying to, to me, I'm like, man, if I was that terrible, I would just, when I decide to go long, I'll just go short. And when I think it's going short, I'll just go long. But you have to be able to that's where you know you're emotionless, right? When you remove emotions and you're just like, you know what, I'm just going with the mathematics here, right? I'm just going with, what happens the most to me, right? And that would actually cure a lot of people and they'd be successful at trading. But, so for you, when you're like, you see momentum, right? And you say, okay, it's finally happening. Your mentality as a trader is kind of like a motion side to say, man, here we go. And then you get in on the momentum. What you're forgetting is the basics of everyone else, right? Everyone else is like this. And you have to kind of this is why I say you always have to have a trade review, meaning like you do something 10 times and you track what happened, and then you do it 10 times again and you track what happened, and then after the third time doing it 10 times, you have a law of average, right? You have a better idea of the results that you're going to get based on how you trade.
Yeah.
And then once you have that, boom, shout out to my daughter Ari, it's 10:10. And once you have that, then you're in a situation where you can just repeat, you can fix things, right? All depending on what you're trying to do.
Can I show you what I'm trying to do now?
Yeah.
How I'm trading. Yeah. If you go for Solana and go for 2 hours, I use the stochastic and your moon indicator.
Okay. All right. So you want me to look right? We're gonna look at the chart. Right? Are you talking about right now?
Yeah, if you have time, of course.
Yeah. All right. So right now you're on the 2 hour.
Yeah. I just go for the 2 hour, and if you have the stochastic and the moon alert indicator. Yeah, that one. And as soon as I see the 2 hour is crossing the 20 line, for example, on the bottom here, I want 1 hour and 2 hour head in one direction, and then I look for a 15 minute pullback or something, and then I try to get the bottom there.
Okay. So when you said 20 line, are you talking about negative 20 down here?
No, then I talk about the stochastic, sorry. Or above the 20 line.
Yeah, because this is the
I just remember you did some on the stochastic RSI.
Okay. Yeah. So we're looking at the RSI. So we're looking here. So what you're looking for is when the 20 line. So we're talking up, right?
Yeah, up or down.
Okay.
I think
80 on the way down. So here you're looking up, and here you're looking down.
Yeah.
Okay.
And then I just look for the 1 hour. I also want that in the same direction. You did some videos in the summertime about some boxes or something.
Right. Trading zones. Trading zones. Right.
Yeah.
Okay.
And then I have 2 hours and 1 hour go in the same direction, and I know it's going to be a 50-minute pullback sometimes.
Okay. So let's take a look. Okay. So all right. So you have your 20 breaks. This is where you're looking to go long.
Yeah.
And then you have the 20 down. Okay, so let me put what you were talking about is trading boxes. So I'm going to put the 20, which would be you wouldn't know it hit until the next candle, which would be about here.
Mm-hmm.
Okay,
Yeah.
and then that would basically we're gonna make this white because that's the 2 hour long zone.
Yeah,
And
mine's a white too.
yeah, yep, yep. And then the rest of it is down. Okay, so now you have that. You said you go to the 15.
Yeah,
Okay.
50 minutes. I also look for the 1 hour
Okay,
to
so
get
we're
a earlier entry, but usually it's not the safest one. I get the yeah, that's a red box there.
okay, so we're gonna go ahead and I'm gonna give you. So you're talking about when the 1 hour starts to go up and hits the 20.
Yeah,
Okay, so
yeah.
I'm gonna create a box here, and I'm gonna make this one blue, so that we know that that's the 1 hour pre-entry.
Mm.
Okay, that's where you could have got
Then
in
I
earlier.
then I go for a 15 minutes and look for what the 50 minutes is doing.
Okay, so then we're at the 15 minutes. So what do you like to see on the 15 minute? Are you watching the
Uh,
moon or you're watching the RSI?
I watch the RSI mostly, but yes, we need to have a agree. I'm not so sure. Sometimes I follow the moon also, but I don't know. With the 50 minutes, usually it turns around and do the opposite. So
Okay, so what?
the RSI is
Tell me.
good.
So okay, so what are you? So when will you enter here? Like what's okay? So let me explain.
You
Let me
see the
explain. So
blue
you
box there, the 1 hour. If the RSI is in the bottom there, maybe I will go for entry here.
okay? So here.
But
So your first two steps are fine, right? Your strategy is fine.
yeah,
You're waiting for the 2 hour to break the 20. Perfect. You're doing a trading box zone. Perfect. You use the 1 hour as an opportunity to get in earlier. Perfect. Those
mm,
are that's the system, right? And now,
mm,
so that's your system. Your system is wait for the 2 hour RSI to break above the 20 line. Then
yeah,
use make sure the 1 hour is also headed up. That's your system.
yeah,
Okay. Now we got to move to your strategy. Okay. And this is where you have to be a little more precise, right? Because when I was saying, well, how do you enter? You were kind of like, well, I look at the 15, but you don't have
yeah,
specific like ideals,
yeah.
right? So this is where you
I
have.
go for the 15 bottom, and then I look for then I go after the 15 minutes is turning. I also look for the 2 minutes, blue moon on the 2 minutes, and the first green candle. If I know everything is pointing in one direction, for example.
Okay, okay, okay. Hold on. So we'll repeat that. All right. So now, once this is here, we go to the 15, and you look for what?
The 15 minutes also need to turn upwards, go up,
Okay. So this is the
like it's doing
RSI.
there. Yeah, yeah.
Okay.
So 1 hour for the first entry. You have a 1 hour
Yeah, right here.
pointing up, go up, yeah. And
Yeah.
then I look for a 15 minutes pullback. But
Okay.
as you see there, it's not doing any pullback there before the two
Right.
hour
So
hit.
you're waiting for the 15-minute pullback, which I like. Okay, I like that. So far you're doing well. So you're looking for the 15-minute to come back here,
Yeah, yeah, yeah.
and then that is where you would create your decision. So you would be looking to buy in this area here when it starts back up.
Yeah, but I also box that one out. Usually I make a yellow box for that one. And then I look for the 2 minutes for get the lowest entry.
Okay, okay. So then let me box that up. Uh, the sciatica is a pain. All right, so then it starts to go up, which would be right about here.
Yeah.
And I'll turn this. We'll make this white, or actually green. So that's our buy zone. So right when that happens, it starts to go up, which would be probably about here.
Mm.
Then you go to the 2 minute once that happens,
Yeah.
and now we're inside that little green box. So now inside that little green box,
Yeah,
this is
I'm looking for a 2 minute blue moon, but actually I don't know. Maybe it's just have a 2 minute pullback on that one.
all right. So now I'm just gonna go
But
to
you
the
have you have the blue moon. You see the blue moon and the first green candle after the blue moon.
right here.
Uh, yeah,
So
green candle. Yeah.
yeah, oh green candle, right? So there's your blue moon, right? And then you look for the very
Mm.
first green candle. So what
Yeah.
you're saying is you're looking for blue moon and then first green candle right there.
Yeah.
And that is your entry.
Yeah.
All right. I mean, I'm not mad at that. I mean, here, okay, so now, so that's your strategy. That's your entry, right? Which is good. I
Mm.
like it. Now, what's bigger question is
Loving relationship, right?
now the biggest question here is going to be what,
Right.
and you have to use the same thing over and over, right? So, what is your leverage here?
You know, when I watched the academy before, we always talk about the 50x
Uh huh.
and go for a 1% push. So yeah, I'm looking for that 50-50 leverage.
Okay. Okay. That's perfect. So let's go ahead and we get that one green candle. So this puts us, we see this one green candle, which would basically mean at some point, once that green candle hits, we'll see it go green. That means that our entry would probably be, it's going to be somewhere on this next candle. So I'm going to put a high entry point here, just so that we understand that it's like trying to, it's not the greatest. Guys, if you're in the Discord, make sure that you mute your mic on there. Nikki,
Sorry,
you're good.
I'm muted now. I don't know how to keep unmuted.
And then, hold on here. I'm getting my dough short real quick. User. All right. So now the reason why I put the white a little bit higher is because what I want to see is I want to show you something here, and something that we can see. All right, and you see the two white lines that I put there.
Yeah.
So basically, what this is that if we go back, we can see that there's a little bit of support and resistance there, but this is the support area, right? So it's kind of like once you entered, those last couple candles kind of said that that was the lowest area that it could go to, and then this is your entry, right? So if you entered there or decided that you're getting in at this entry, right? And this is kind of where this might be able to help you out in the future to where you have an ideal of understanding the leverage that you can use in this scenario, right? And this is kind of what we call a rule that we can place into our entry that'll allow us to protect ourselves from the next pullback, right? And also this will allow us to see, because you're shooting for 50% profits because you're looking for a 1% move, right?
Yeah.
And currently, to kind of like get the academy was high leverage trading, and what it was about was teaching people to get their entries in to where they're doing an entry at a high level. And hold on here. Crypto Jiggy. Let me read some of these comments real quick. Do 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 do. And what I want to show you here is kind of like a kind of way to put safety for yourself, right? And that's where you can see the how to protect yourself a little bit on there. Russell Jerry, good on which safe indicator, blah blah blah. Okay, so guys, if you have any questions, guys, if you want to ask me any questions, if you have any crypto questions, guys, you can just go to my TikTok. There is an email in the bio. Send me an email and I'll answer any questions for you. I'll do a Q&A at the end of this, and then we can go over everything that you're like asking there. So now the reason why I put these two lines here is because I wanted to show you that, before when you go to get your entry, right? So you have your entry point, And you can see here we have our entry point right here, right? This green arrow, which would be this white line. Now, before that was happening, when that first green candle came in, we can see that there's areas here along the way that it showed you that there's going to be support areas, right? You can see that there was a couple times it hit support, and then right before it went up, it had that period where it hit support, right? So when you enter, if you measure, like if you're basically what you'd be doing is you would already, so you know, because theoretically you have an ideal in your head, right? And the ideal in your head is that you're going to do a 50x leverage, right? Which means your stop loss, right? If it moves 1%, your stop loss would be 50%. So if your stop loss is, so that's another, so what do you put your stop loss at?
You know, before we do 50, so I guess 50-50.
Okay. Yeah. Which means you have a 1% pullback. Right?
Yeah.
I'm going to invite Panda. If you have any questions, Panda, you can pop up, ask me questions. So guys, if you want to come up here as a guest, you can, and ask me some questions. Just request to be a guest, and I'll send you up here. So that means you have a 1% pullback margin, right? Meaning that it can't go more than 1% back, right? This is why having a system and a strategy is so important, because what it allows you to do is create the rules and the safeties that you need to execute. So by having a 50x leverage, by having a 50x stop loss, we know that you are going to, if you want profits, you're going to have to go up 1% and you get 50% profits. That's the goal. And we also know that if it pulls back, you only have a 1% pullback margin, which is basically represented by these two lines here. Okay, does that make sense now?
Yeah.
Okay, so now that we have that kind of like there, we know that if it pulls back to that level, it's gonna knock you out. And then if it goes above that level after you entered, which I'll put here, the third line, right? And we'll turn that line light blue. Then we win. So on this particular motion here, if you got into that one candle, there was a pullback, right? Which was that next move right there. And if you got in at that 50%, you can see that it hit that bottom line, right?
Yeah.
So what that means is if you posted this and you said, yo, VC, this is my trade, I lost this trade, right? I can see why you lost the trade is because there was a pullback that happened to you at the very end, right? And that is where you would have lost that trade, right? Because that one little candle right there. See it?
Yeah.
Now, how many times, right? This is kind of like our thing is if you made this same trade 10 times in a row, following the same instincts, and we had data, right? Let's say that you did this trade 10 times. And 4 times we didn't get that 1% pullback. It didn't stop loss, right? And it went the other direction and we won, right? Because this was a great trade. You're right on the money. See, you would have won that trade right there. That was a 50% gain. You see what I'm saying? So from where you entered to where you were going, right? Entering on that first green candle, which would have been here to here. That's a successful trade. See what I'm saying? Except for that next candle that wicks you down. Right? Now, what we have to do here is because we don't, this is a strategy that you have to track, right? And this is one that I can actually go back and, repeat with you and track with you. And start to see where this is, how many times out of 10 times, right? And actually we'll do a 30 trade review where out of 30 times, how many times did this one red candle hit, right? Does it happen 4 out of 10 times it doesn't happen? You're right. Does it, does it happen 6 out of 10? Does it happen 4 out of 10? Right? Now that's where
Yeah.
we're learning the whether it works and it's profitable, or if we need to make an adjustment to protect ourselves from that 1% pullback, right? And what I mean by that is this, right? So when you're supposed to do a 10 trade review, the 10 trade review is pretty basic. The one thing you write down is how far it went back before it went up, and how far did it go up. And what I mean by that is that you would have a pullback here that basically from your entry based on what you did, the pullback would have pulled back to .87, around there. So this would have been real close. You might have got stopped out, and you might not have got stopped out here, all depending on what your entry was. And don't forget, I'm at the highest entry, so I'm at the worst. Yeah. I'm at the worst entry. So if you did better than that, then you had a successful trade here. But I wanna kind of cover the the not successful trade. You know what I mean? Like I don't always think you guys win. I always go by based off of possibilities of losing. So based on this, the pullback on that one wick and our entry point being our highest, right? So we can see here that there is, on that pullback, we can see the percent that we pull back, right? So we were measuring this going from the pullback side to our entry point, 0.84, right? So it's like in that little spot there. And what we're doing here is we're trying to find, what you need here to be successful here. So here's a 2-minute, right? So let's get you a 1% pullback. So here's your entry point. We're gonna pull back 50%, right? So let's get down here. We need a 1% pullback. And this right here would be your 1% pullback right here. Okay. So this right here is your safety line. It's about a 1% pullback. Now from your entry point, which is this white line here, right? Now we need a 1% upward movement, right? So Okay, here's our 1% up. Okay, so now we move this blue line up here. All right, so now these are our two targets here. So one, we need to go up to 133.14 to be successful, or we end up down here at 130.47 and we lost the trade. And our entry is the white line right here. And that puts us here. So entry point would have been 131.38. From that point up to 133.14 was successful, to a 1% negative position downward, which would be 130. This would be a loss, right? That makes sense?
Yeah.
Okay. So you get in this trade, and if you put this is what I was trying to tell you, like if you put that, your support and resistance zone there, right? And we'll turn this yellow. And that is where you would basically measure and say, okay, now that I'm getting in this trade, the pullbacks that it's been happening has been pulling back to this area here, right? Which shows you that there's support there, right? And that's nowhere near your 1%, right? The next area that is support is that if it does come down, would be this area here. You see that?
Yeah.
And that's because if you got in the wrong position, you have all this cluster down here. And this is basically the area of the last support, right? See these three areas here? So if it does pull back, that still doesn't touch your 131% pullback, you see? So even if it decided to make a pullback that you didn't see and it comes down to here, let's say the lowest support area, which would be off of this lowest wick here, and then it decided to go up, right? You'd still be in a good safety position here, and then you would have executed here, and then you could see that our take profit is about here. So this trade actually worked out for you your if you set your trade up correctly, which would be you saying that, okay, I put a take profit at 50% and I put a stop loss at 50%.
Yeah.
So far, what you're doing is correct. You did a good job of avoiding the big pullback, which would have been of this area here, this circle here. You did a good job of avoiding that pullback by letting that 15, like you said, you letting the 15-minute reset. You avoided that pullback, right?
Yeah, but sometimes I get scared because I get the blue candle, for example, for the 15-minute pullback. So I leave it.
Yeah, but that's
Yes,
so. Okay, that was perfect,
yes,
man.
yes.
So let's go back and look at the whole trading zone, right? So first of all, we have the blue box, right? The blue box is basically the 1 hour trade zone, right? This is where you would have got an early entry, right? This is where you would say to yourself, okay, this area here is my early entry area, right? So this is this whole area right here. This is the area that you would have been looking at, going, okay, this is where I want to get in early, right? And I'm going to turn that purple. And that originally is your original buy zone for your 1 hour, right? Now, this is probably where you get in trouble a lot of times, because what happens is how you were talking about earlier, that once you see the momentum, right? And you start to see the momentum break out like this, right?
Yeah.
That's when you decide that you start getting in, right? And a lot of times you might get in up here, and then what happens? Starts to pull back on you.
Mm.
Now, this pullback didn't pull back far enough to get you into any trouble, but it might be that you're trading scared. Sometimes, do you close your trade early yourself?
Not anymore. I did a lot before, but now I just set my stop loss and let it go because if I close my trade, they will turn around and do the opposite. 100%.
Okay, so you've learned to. Okay, perfect. The first thing is to stop being emotional. You know what I'm saying?
Yeah.
Is you can't, once you're in a trade, you already paid for the trade. It's if you close the trade, you're pretty much giving up not only the loss but a little more loss. So if that's the situation where you're in a situation where you want to be, you want to lose less, then you got to get yourself in a situation where you know you kind of like have to mathematically decide what's the most you can lose, right? And I'm gonna do a video on that, and then and just accept that this is the reality, right? This is why if you have $100 and a 50% loss would cut you down to $50, you might want to say, okay, I need to you know decide that I'm only going to lose 50 or 25%. So that way,
Mm.
if I do take a loss here, I'm in a position where I still got 75, right? And it's easier for me to build out of, right? And that's
Mm.
where, going back and forth on the mathematics, it's like, sometimes, the trade that you were in based on how you did it would have been successful if you had if you had the extra stop loss, right? So that's where it's the understanding that if you say you take a 25% stop loss, you lose $25. You reset, you get in again. It pulls back another 25%. You lose 25%. Then you get in again, and then you have $50, and it goes up, 50%. You get 25 back, right? And you're at 75 again. Now you lost money in there because you got into two trades instead of one trade, and you paid a little more for the fees. So if you would have just got in and said, you know what, if I lose my 50%, this is just where I'm at, right? So that's where some people they start going back and forth on the percentages, and it costs them in the long run because they lose more money on fees and trades than they do from the actual trade, right?
Oh yes, they
So
add up.
yeah, so it's better if you're doing that not to sacrifice the loss, right? If you got $100 and you're going to lose 50% of it, it's better to keep it that way, but simply to increase your odds of being successful would be to lower the leverage from 50x leverage to 30x leverage, and then instead of taking 50% profits, take 30% profits. See what I'm saying?
Mm. Yeah. Yeah.
So it's you're winning less, but you're also losing less. But that allows you to be, if you're doing the trades correctly, you're winning more than you're losing. So that will add up over time, right?
Mm.
So that's
Yeah.
that's how to understand, the proper way to, risk versus reward, right? So going back to your trade, we can see here that your 1 hour trade, I can see where you kind of like get yourself into trouble is that you see, the breakout candle. And this is kind of like a basic breakout here, right? So this breakout happens where there's a cluster, just like we were talking about. So you see that there's a situation where it goes sideways here, and it just ends up in a zone where it's going from top to bottom, and this goes along the entire way if you go all the way back. And eventually it breaks the box, right? So I'm going to take this purple box and drag it across. And you can see that in this purple box, right? You see how many times it hit the top and then it hit the bottom? You see that?
Mm.
That's a cluster, right? And this is what we talk about cluster trading, right? So you see how the pullback happened, right? And on that pullback, the entire time there was a cluster there, right? It was cluster trading. And while it's cluster trading, let me grab this real quick. While it's cluster trading, this is what I mean by having understanding the strategy, but also understanding um, understanding how to have a better strategy when it comes to what everyone else is doing, right? So if everyone's doing support and resistance, then having a better strategy is going to get you in a position where you do better with the same information, right? And this is an example of kind of understanding um, how to do better in those scenarios where when you have the same situations and then just basically executing at a higher level, right? So that earlier box, which is kind of like how you can understand this is a cluster, right? So in a cluster, we can see that there was a bottom, then there's a top, and then it comes back down and it creates another support and resistance back to the top. Then it has a deeper, right? It goes back to where it's supposed to, and then eventually it makes it back up to where it was supposed to, and then it has the bigger dip, right? Which is this big one right here. Now, what we talked about earlier, that normally you have a setup where you have a thing that creates a resistance or a support, then it goes back and creates a resistance, and then it hits the support again, and then you have another part where it hits that top, and then goes back and hits its bottom piece. So earlier we were talking about how the average of it is that once it finds support and resistance, right, top, bottom, bottom, top, that it normally has a 5-piece run, right? So you have the first bounce, 1, 2, 3, and then 4, right?
Mm.
Then from there is where it starts to make its decision, right? And you can see here it originally once the people panicked, right? You see this sell off right here. Once they created that sell off, they created the zone for the move to the upside, right? You see this big sell off here, this big dip. So now when that cluster came back up and it started to cluster again, where it hit the previous resistance, came back down, hit the support, hit the resistance again, right? And what it did here was it played the same game it was playing earlier. So support, resistance 1, support, resistance 2, support, right? And then there's the move, right? So notice like each time here. So if you have the support 1, support 2, right? Then the big dip. And then on that big dip is the one you'd be buying, right? Because that's the big dip. The third move up is where you'd be playing to the resistance, right? So let me put these in here so we can see them. And this is just so you can understand what's happening. But I'm gonna get back to what I was saying is that once you have once you know what's happening, then it's all about finding the things that teach you the better ways to execute on what's happening, right? So we have 1, 2, 2, 3. Oh, I don't want that. All right. So here we have our first top, then we have our second top, and then we have our third top, which is here. Okay? So, first top, second top, right? And then down here, it hits its final support and makes its third top right here, right? Now, once the third top hits, remember the Elliott waves, right? First wave, second pullback, third wave's the biggest. That make sense? Then people react because they're trading. So this is like having, I understand that everyone's trying to be intelligent here, right? So they know that the third time, that's the end, so they sell, right? Now that sell-off, which is this big area down here, it creates this nice little pullback. That's the panic sell, right? Now once that goes up, right, you can see here, it pushes back up to the top, right? And now we're back in that zone where we repeat that 1, 2, 3. So here's its first one. Here's number 2. And then on that pullback, this is where you would be going long, because why? Because the third one is normally the biggest one. See? See how that worked?
Yeah.
So now that you understand why I'm teaching you, I showed you guys Elliott waves, was just for you to understand that how something reacts, right? So that way, once you understand how it reacts, you can put yourself in a position where you're like, okay, 1, 2, 3, 1, 2, 3, right? So it just gives you something to understand what everybody else is doing so that you can be better at the game, right? So now that you got your 1, 2, 3 there, right? Normally, as we know on the Elliott waves, the third wave is always the biggest wave. So when it pushes up, right? If it hits your target, which at this point, if we zoom in here, we can see that the wave, started to hit a point right here. And now the new target, as you can see, based on the price levels, the first one went to here, right? And that created the tops. And you can see that all the tops hit the top. Bang, right? Here it hit the top. It pulled back. What did it do when it pulled back? Came back, and what did it do? It hit the top, you see? Now the difference in the 3 waves is this, right? Over here, you have a top of a wave. That top goes to here, right? So I'm actually going to push this up a little bit, and I'm going to put it here. This price is here. It's going to be 130.59. It hit it again here. It hit it again here, right? And Those are your three hits. 1, 2. There's your 3 hits. Right? Then it tops off and it pulls back, shows its support, and it hits, boom, its final hit there. And this is after your big pullbacks, right? So this is why on the 2 right here, we have this second pullback. When you see this earlier tag here, it's because it didn't fully like rotate down. It didn't kind of like pull back. But normally you have 1, 2, 3, boom, 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 big pullback. It bounced, starts to move up. It gives us the last hurrah, which is this one, right? And we know somewhere in here it's going to make a decision, right, after 3, right? So whether you make this your 2 and you make this your 3, once that happens, it has to make a decision. It pulls back here, and it decides to bounce one more time here at the bottom, and it pushes up. Now this is the decision. It's either going to break through here on number 4 right here, number 4 is decision maker, right? So here you have number 4 hits this. It's decision time. What's it going to do? Break out or go down, right? Ends up going down. Over here, we're in the same scenario. Comes out. We have that big move to the bottom. That's when it made its decision that it was going to just dump. Once that happens, we get a new support zone of 130. Comes down, right? And this is our new support area right here. It hits it once. It hits it twice. It hits it 3 times. And then what? Once it pulls back, we have our what? Our decision, right? Whether it's going to break through, which is right here, or it's going to go down. So what did it do on the 4th one here? It broke through. See right there? See that breakout?
Yeah.
Now, once it did its breakout, right? And you can kind of see that happening if you're watching the cluster, right? And this is where you'll be able. So that's why a lot of times when people are making these trades, they're kind of stuck in no man's land. And what no man's land is where your strategy is to play it based off of support and resistance, which means that they can't get this entry unless it went way back down to here. Does that make sense? This only pulled back halfway, right? Then once it does a breakout, which would be breaking above the last resistance, which would be this purple line here, then when it retests, right there, you see the retest? When it does the retest, this is where most people would buy. That makes sense? You see that retest right there?
Yeah.
So that creates where most people would have bought here because it was a breakout from the purple line, the previous resistance, which created this purple buy zone right there. See that? That makes sense?
Yes.
So when you're seeing this happen and you're aware of what is supposed to be happening, right? Remember I always say, when we know what's supposed to happen and it doesn't, then we know what will happen, right? So once we see this happen and we see the breakout, which happens to be right here, when this decides to finally break out, we see the push to the top side, then we see the pullback, and then we see the breakout after it pulls back. Because what most people were doing is that they don't trade inside the clusters. They wait for the clusters or the channel to get broken, right? So even though this was a big pullback here on number 4, it showed us that it was going to break down. And then once it popped up here and made its choice to go to the top, it started a new up and down cycle, 1, 2, 3. And then the decision was after 3 was, what's it going to do? Is it going to break all the way down? Well, it decided to find support halfway back down, and then that's where it broke the support zone, the resistance zone, retested the resistance zone on the white candle right here, and then broke out. See how that played out?
Yeah.
So now that you know that that's what you're looking for, right? And you know based off your decision, right? Because you know that you're also based on your trade, which was wait for the 2 hour to break the 20, and then start with the 1 hour breaking up. Now, notice that the breakout didn't come before the 1 hour started going up. You see that this entire purple box is inside what? Our 1 hour buy zone. You see that?
Yeah.
So for you, unlike everyone else who's sitting around, right? The people at this earlier cluster, right? So see where the purple cluster is on this side, right? I'm gonna make this a this rectangle here, right? So when you see this entire rectangle here, I'm gonna turn this one yellow, right? So you see the yellow zone here. Now this entire cluster that happened here in the yellow zone, that was before the 1 hour was headed up, right? So theoretically, based on how we trade with our moon indicator, we would be expecting this to go to the downside until the 1 hour starts to go up. Does that make sense?
Yeah.
So for us, we would be thinking the instead of grabbing the bottoms and trading to the up, we would be grabbing the tops and shorting to the bottoms. Does that make sense? So here, instead of most people will buy the bottoms and go up, we would actually be buying the 1, 2 tops and we would be trading down. Does that make sense?
Mm.
Because we don't have the 1 hour going up yet. Does that make sense? So we would be trading into the short and then we would catch this number 4 right here and we would get this big short that just happened there. You see that? And that short was worth almost 2%. So to understand the cluster trading, just so that you understand how to whether or not this would be valuable to us, is that once we have a top and a bottom of a cluster, which would be the top of this would be 130, the bottom of it would be 129. If we measure that bottom to the top, right, and we said, okay, so every time it hits the top, it goes down, it's about a 0.84% move, which means if we're doing a 50x leverage on our short, that's about, and you just do simple math in your head. If it was 1%, it would be 50% profits. And if it was a 0.5% move, it would be 25% profits. And if it was a 0.75, then it's in between that, right? Which would be basically 42% profits, right?
Mm.
So we
Yeah.
know that if we get a 0.75% move here, that we can make about 40% profits here, right? This
Mm.
is why I started showing you guys how to trade the clusters and take 30% every time.
But how fast do you recognize the cluster when it starts to bounce? Just from the
The 1, 2, 3. So here's your bounce, right? It found support at 129. It then
yeah.
ran up to
2 minutes when you're trading a cluster?
yeah,
Or?
yeah, yeah. 2 minute, 1 minute. I like the 1 and 2 minute in the
Yeah.
clusters,
Yeah.
right? And then it comes down to the percentages, right? So here it hits the number one spot, 130. Then it comes down, right? You see how it came down partially, then it went back up and hit 130 again. It rejected again on number 2. You see that?
Yeah.
So now I'm seeing the rejection. So on number 3, which is over here, this is where I would have put my order for my short would have been right here. And I would have put this short in and said, okay, this is the one that I'm going off of. So I would have shorted 130 down to the 129. So that would have gave me my 30% profits, right? Now, once it hits that, it bounces up, and then I would go for it one more time, which would be number 4 here, right? I'd go back to my 130 entry, and then I'd be looking for that move down right there. The reason why these two would be my shorts is because it's already, this is how I found the cluster. I know the cluster is valuable at 0.84. Now, normally, I like to see, like I said, you know, depending how good you are at looking at the moon and seeing, the patterns of what's coming in the future, right? That's what allows you to be a little more aggressive, right? By knowing that if I was looking at that time frame, I still had the 1 hour down, the 2 hour was down, and the 3 and the 4 still had, were still down, right? So that gives me a lot of leverage that's saying that, okay, this is going to be a down, right? So I can play those odds a little bit more. Now, as it gets closer to where, it's starting to go the other direction, I also know that I'm not going to push this, right? I'm going to take advantage of those, it's like a snowball. Remember when the 1 hour gets close to the bottom and the 2 hour gets close to the bottom, a lot of times there's a big dump that happens at that point because that's just the exhaustion of it going down, right? It has to just, there's no more support. It just hits its level and it just dumps and it just moves on, right? So this is where once that happens and we get that big dump, I know that I'm not going to continue with that once I get that big dump, because once that big dump happens, that's pretty much the end of that pullback. Because now the 1 hour is at the bottom, it's starting, you know what I'm saying? It's got to bounce because it's going to find support because people are going to put support levels, limit orders, right? So once the limit orders start getting hit, then we can see where the limit orders go, right? Whether they can build momentum or they do 1, 2, 3 and repeat the same pattern we just saw, and then number 4 dumps again, right? In this scenario, it built up momentum, and the 2 hour started to go up, the 1 hour started to go up, and that's why when the 2 hour broke the 20, we knew we were in a position where, we had momentum, right? So here we would walk through this short position, right, on 3, and then 4 we would run it one more time, and then that's where we would get our big pullback. Either way, we would have hit our 30% because it hit our line. But if we were kind of like new moon improvement, okay, if we were kind of just sitting there watching anyways, and it dumped through more, we hit our 30%, so we would have made 60% on this, and then we had that big dump that happened. After that big dump, right, this is where we watch what happens when it does its first move, right? So its first move is to go to 130.25 and create a number 1 top, right? Now we need it to go down and show us where the support is. It shows us where the support is, and the support happens to be at 129.24, right? That's the support area. Now we have support, then it bounces up, gives us our number 2, hits the 130 again, and then from there, what does it do? We go back down and we get support. Now this time around, we look for that support area to, now look at what's happening here. Now we're inside the blue box. See the blue box? So now, instead of me shorting 1 and 2 at the top, now on the third move, I'm looking to actually buy the support on the bottom. Because now I know that I'm moving in the 1 hour upward direction. Does that make sense?
Yeah.
So now, let's say that I look at this and I would say, okay, here's my 1 top, here's my 2 top, and then, theoretically it pulls back and it gives me a third push here, which is just, a lot of times I don't count that little peak right there simply because it's like, it's just people, it's FOMO. It's someone like how you say, I got my momentum and now I'm buying, right? That's where this right here, this little in between, right? This between 2 and 3 here, you see this little section here where there was a red candle and all of a sudden there was a bounce, right? You can see right here this little, it was supposed to pull back, but then everyone decided that they were like, it's getting on right now. This little short arrow right there. But then they dumped anyways, right? Then they dumped on them anyways. Now, the thing about that is if we measure this, it doesn't seem like a lot, but I mean, it's a 0.5% move, maybe 0.75%. Is that if you're doing a 50x leverage there, that's about a 30% stop loss. There's a lot of people that got stopped out right there because their stop loss is 30%. So they would have lost that because they would have entered here at the bottom of this little white candle here. Bless you. Their entry would have been this section here. And then what happened was it pushed up and then it just dumped on them because they jumped in too early, right? That's why we always say, get greedy with your entries and go to the last support zone. So if you're going to get enter here, this entry point right here that you think is going to go up here, your best bet is to just go, okay, I think that I'm going to enter here. Let me put my entry on the pullback support of 129.48. You see? Then from there, you get yourself in a good position. See how that worked?
Yeah.
Now, if you watch that and you do it 10 times in a row, you'll realize that 8 out of 10 times it pulls all the way back. Or even 7 out of 10. And then 3 times, let's do the mathematics here on the percentages of 50-50, right? Let's do a coin flip. Let's say that if I tell you that's what you should do there, that would be the smartest way to do it. And you say, well, shit, VC, I do that, and the reason why I can't, I feel like I have to do that is because what if it takes off, right? And I say, well, what if it's 50-50? 5 out of 10 times it takes off, and then the other 5 out of 10s it doesn't, right? So let's take a look here, and this is why I was measuring it, because if it does a pullback like it's supposed to from your entry, it's a 0.5%. So based on, right, and this is why I tell the newer guys that come in to trade at 20x leverage, is because it allows them to get more information and more trades. And honestly, if you do my system and you trade at a 20x or 10x, you're going to be successful anyways. It's just going to be, you're going to be in a trade for 2 or 3 days versus 2 or 3 hours. But at the end of the day, you're going to win. The whole ideal here is not to lose a trade, right? So if you break this down here and you say, okay, I'm going to do that at 50-50, and you say, well, VC, 50% of the time I lose, right? Well, this is a 0.5% pullback. So if you're doing, let's say, even if you're doing a 30, invite you to co-host, I got to decline that. So if you're doing that's my boy. Hold on, let me get an invite. What up, Am? I love this guy. And so if you're doing what we're supposed to do here, right? And you go in there and you say, okay, 50% of the time I make the decision to, take the limit. And you're gonna say, yo, VC, half the time it goes up on me, right? Well, if we're doing a 30x leverage here and it moves back a 0.5%, right? That means your stop loss would be 15% stop loss, right? This is why we always tell you if you're doing a 30x leverage, you're going to run about a 25% stop loss because you got to give yourself that pullback, right? Now, some people try to cheat the system and they go, well, you know what? I'm going to do a 15% pullback. And then they end up getting stopped out on this move, right? And they don't understand that this is all mathematics. This is why you have to make, when you make your decision, you got to kind of like go with it, right? If you're doing a higher leverage, let's say 50x, this would be a 25% pullback, and most people have a 25% stop loss, you would get stopped out here. This is why, we always talked about if you have the system down and like you have the steps that you're doing, if you do it correctly and you know that, 8 out of 10 times you're correct, right? Your average wins are gonna be better than your losses, but you're pushing a 50% stop loss, right? And this is where we'll have to go over and try to get you something a little bit more better to be more successful. Yo, Bitcoin's freedom. What up, brother? And this is where we'll have to calculate the losses and the wins to get you where you need to go. But so let's say this pullback happens and it's a 0.5% pullback, right? Your stop loss, if you're doing a 50x, has to be at least 30. I'd say you might want to be doing stop losses around 35%. Instead of 50 as we get better. But most people will get stopped out here. If they're doing any higher leverage, which most people will do, this is why most people lose, is because most people will trade with, in this particular trade, maybe a 75x leverage. And right there, they would have got stopped out because their stop loss would probably be 25, 15, 30, maybe even 40. Now, if you're doing a 30x leverage here, right, you only pulled back 15%. Hopefully you're doing 25% stop loss and you'd survive this, right? So there's a lot of scenarios here that you can calculate how to survive this trade, make the correct pullback, and still be successful, right? A lot of times out of this, we're going to survive the pullback, we're going to be good, we're going to get our number, right? Now the thing is here is that if you do 50-50 on this, right, hear what I'm saying. Let's say that 50 times you decide that you're going to set your pullback up, and 5 times out of 10 you don't get this trade, right? And 5 times out of 10 this trade goes, pulls back to where it is. The reason why we do the pullback is this. The pullback is a 0.5% minimal, right? Which means if you're doing let's say a 30x, right? You're a 50x. So this pullback would be about 25% pullback, right? If you set your entry at the pullback level, that means that instead of you going backwards 25% before it went up, you actually would start with a 25%. You actually just gave yourself a 25% gain because you caught the pullback. So when you start to go the other direction, right, and you're aiming for 50% profits, you just increased your chances of hitting 50% profits by double because you just made half of your goal. That makes sense?
Yeah.
So now the times that your trade only goes up to 30, 35, maybe 40%, and then goes the other direction on you, and you end up stop lossing out at maybe where you entered 0, or maybe you took 15% profit, you've now turned that into 50% gains. That makes sense?
Yeah. Yes.
So now the trades that were not going all the way all the way they're supposed to go are now giving a 25% boost because you got a better entry. So the odds of them being successful have now doubled. So now the trades that you weren't getting 50% on your trades, now half of those you're getting done. So instead of only winning 10% or going up and then going the other direction on you because you forgot to move your stop loss, right? Are you, so when you get to, let's say, 25% gains, are you moving your stop loss to entry?
It depends, but I'm really scared to get stopped out, and I don't want to lose the trade, so
You just keep it at 50.
Yeah, sometimes.
Okay.
But,
so what you want to do there?
Sometimes it's hard to admit that it's a wrong trade and the trade is not going my direction. So I just keep it and then I lose it, if you know what I mean.
Yeah. And this is where this will help you out here, because one thing you want to do here is limit your losses. So if you're in a trade and it goes up 20%, move your stop loss from 50 to 25.
Yeah.
So that way you lose half of what you normally would. And if your trade gets to 30%, then at that point you should put your stop loss at entry so that you break even. That makes sense?
Yeah.
Right? And if it starts to fall below that, just take 20% and say, okay, let me try again.
Yeah.
Because 20% adds up.
Yes, for sure.
So put that in your strategy, right? So basically, when your trade reaches 20% profits, move your stop loss to negative 25. When you get above 30, move your stop loss to entry. And then once you're above 30, if you go below 25 and you get around 20, just take 20%.
Okay, so you take the 20 at that time.
Yeah.
Mm-mm.
Because at that point, if it broke to 30 and it got above 30 and then started pulling back, then more than likely the momentum won't be there.
Okay.
Does that make sense?
Yeah.
Okay,
Yeah.
so
Many times I see 30% gains, but
yeah. No.
for sure.
The goal is, just so you know, the goal is to teach you to go to how to make 50% gains 7 out of 10 times. That's because once you master doing that, then we move you down to 30% targets, but with more money. Right? Because once you master doing 50, 30 is nothing.
Yeah.
You see what I'm saying?
Yeah.
So
Yes.
once your strategy gives you 50% 7 out of 10 times, if you went down to 30%, then you'd win 10 out of 10. Now,
That's where we want.
yeah, that's where you want to be. Now the difference is this. Right now, how much are you trading with right now? What's your normal bag?
Now I'm at 50, but usually 100. But
Okay.
I've been losing a little bit lately, so I just
Yeah. So that's what I was saying. Like
it.
that's why taking that when the steps we just went over is like when you get to 20% gains, move your stop loss to 25. When you get to 30 plus gains, move it to entry, and then if you get back to 20, just take 20. That's going to solve that little problem there. And then you'll start to see that, okay, I'm actually making a little bit of money here. And then once you get that rhythm, then you can go up to $300 bags. And then start locking in the same moves. And then once you see where you're hitting your sweet spot of 35-40%, start moving your target down to be like, okay, because once you get your entry a little better, right? Your entry a little better, then what will happen is this is kind of what I was explaining on the 50-50 rule. If we went back and just set the buy for the support zone, right? What will happen is 50% of the time by going back, even if I didn't get those other 5 trades that went the way I was supposed to, by having the pullback, that ensured the 5 trades that I did hit their 50% target. So now I'm 5 for 5.
Yeah.
So if I'm doing $1,000 bag and I'm hitting 50% 5 for 5 during the week, right? I walk away with $2,500? Do I really care about the other 5 I missed? Because the other 5, even if you would have got in early and they went for 50%, the majority of the other ones, the 5 that you win 5 for 5 as, you probably would have had 3 or 4 of those not make 50% and actually go win back to 0. So in reality, you're still 5 for 5 or 6 for 10. You're in the same boat, except it was less risk. Does that make sense?
Yeah, and you're in there maybe a little bit nervous also because you see you're in a bad position.
Yeah. You get emotional. So this will help some of the anxiety, and this will also teach you like how to be greedy on your entry. Because you got everything else down, man. Like you got the system down. Now you just have to, now that's why we're teaching the how to see what's happening. Now you understand the 1, 2, 3, and then you can see when it does the big breakdown, you're like, oh, it's going back into another cluster, except this time the 1 hour is in my favor. So now instead of me shorting, now I can be looking long. Well, see, most people when there's a cluster, they don't know which way it's going to go. They got to wait for a breakout. Then when the breakout retests is when they enter. Then from there, they got to hope that enough people are actually entering at that time that it runs. Because sometimes it'll retest, go back up, and then dump. Right?
Mm.
Because they're not like us. They're not tracking the 1 hour and the 2 hour.
Mm.
But we're trading with the momentum of the market. So when we get in a trade, we have an 80% better chance of being correct. Now the best part is that once you start, mastering that ability to be trading with momentum with our indicators, then if you're using lower leverage, 30, 20x, at leverage, a new trader can, he's going to be more successful even though he's not on your level. Like your level right now, you're at a solid 6, where most guys are a solid 2. But the number 2 guy, 2 out of 10, he can still be successful with the system because by using lower leverage, eventually the 1 hour becomes the 2 hour, the 2 hour becomes a 3, and then he gets to a 4 hour student trade, and that pumps for him. It might have took 3 or 4 days, but he gets there. So like right now in the Discord, you see a guy like Young, right? You see how he's trading with 10, 5, 10%.
Oh yes, 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 yes.
So Young is that guy who's using this system, but he's trading at a very low leverage, which allows him to, be less emotional, and then, puts him in a better situation to be successful because eventually the 2, the 3, and the 4 will all come together and it will be a move. And if the market's strong enough, he's going to get the move he wants, which is 30, 40, 50%. But it's going to take a couple days.
Yeah. Yeah, looks like he's killing it.
Yeah. I mean, for him, I got to talk to him because I seen the one loss he put up, and this is where I kind of was like, when you take losses, you got to have a limit to your loss because I think that was like I forgot what level it was. I go look at it, but you don't want to give the market money when you can just reset it, right? And we got to have a limit to how much we want to give back. You know what I mean?
Yep.
And I'll do it like I haven't looked at it completely, but I'll do a video on that. I'm going to do that with him, and then I can go through when he could have got out and reset himself. But that's what I'm talking about. Same thing with you. You would be, once you get to 20% profits, you move your stop loss to 25. Once you get to 30, you
Yep.
move to entry. And if after 30, if it goes back down to 20, then you just take profits.
Yep. Yeah, I will start to do that now.
And that's it. I mean,
Alright.
so everything else is beautiful. But I wanted to teach you today, like, how to go out here. And I'm gonna go. Last thing I'm gonna do here is I'm gonna kind of like open this up so you can see the overall, like what we're seeing, like on the full market. Is that during this entire time through all these trades, and I'll delete a lot of these things that we had here. Is what you're going to see is that when you have the overall that you're looking at, right, and we drop this down and we go to the 4 hour, by starting off with getting support and resistance on your 4 hours, right, you can see that when you got into these boxes and these clusters over here, that at the end of the day we knew that there was support and resistance in these areas, you see.
Mm-hmm.
So as you're fighting through here and you're creating, your next support and resistance, which were these zones here, right? You could see that if you went back to your if you go back into here, that's my people for my MRI. You're back. But you see right here, you see this lower level here? So if we take this line and we go all the way across, notice that in this area here, see how that was support earlier before?
Yes.
So that little section right there kind of gave us an idea that there was some support on this particular area here. See?
Yeah.
And that support
Because I saw one video the other day about set your targets is from your YouTube channel, and yeah.
Yeah. But that right there, that last support ended up being our resistance at the 236. You see that?
Mm-hmm. Yep.
So once you have that and you kind of like go back and go through, we also know that this right here is our lowest. That this was our lowest resistance and support area, 219. So when all this was happening, as we were trading these clusters and you're making these moves and making these trades, eventually you just get to the point where once you kind of get through all that, you get to a situation where you start to realize that all these top supports and resistance, these areas are going to, that's where it's tracking, that's where it wants to go, right? So you see right here, as we start to go down, we know that once the hours change, that we're going to be in a situation. Our ability to look at our moon indicator lets us know when that's supposed to happen. So basically right here, when you were doing all that trading in here, you were tracking the 1 hour and the 2 hour, right? So if we go in here and we take a closer look, you can see that where everyone else is trying to figure out how it's going to go down to this support area down here, right? You knew where the bounce was. See the blue and the white box? And as soon as that white box ended, that 2 hour ended right here, see the end of the white box? What happened? It then retraced all the way back down to its support, you see?
Mm.
And then once it breaks that support, which is where we're at now, we're here. Now we go and look at our moon, right? Take a look at our moon indicator, right? We already know, if we're looking at the moon indicator, we already know right here there's a blue moon, right? So on that blue moon, when it starts to break down, right, we know that we're heading down here. When it bounces, it doesn't make a green moon, so that we know that from this area it's going down. So if I line these up here, and I put this here, and I put this here, right, and I put a box here, I know that this box right here is going to be a downward motion, right? And I'm going to turn this purple. And then this box is where the next arrow is, because the 4 hour didn't make a moon. So now I know right here, when it didn't make a moon, it started to head down, right? You see right there? I know that this purple box is down too. So these two boxes right here, these are downs. Now if I take this, do you see what I'm saying? See right here how the blue line went up and started to come down? That's where I put the purple box, right here. So that's when it starts to go down. Over here is when it rejects the green moon and starts to go down. So these two areas for us, these purple boxes, we know that these are downs, right? So during that time period, the only time there was a bounce in between these periods are what? Your blue box and your white box, you see?
Yeah.
And then after they were done bouncing, we went right back into a purple, and then what did we get? A retracement to the support zone. And then because we're still in the purple box, what do we know? We know that it's still going down. So if I went back to my 1 hour, and we pulled up,
There's
yeah, the 1 hour has been going down since the purple, you see? So this is the 1 hour now.
Yep.
So here's your RSI. See how that's going down right there?
Yep.
There's your purple box. See?
Yeah.
So as long as that's going down and you see the support right there, you know it's going to break that support because the hour is halfway down. And if I look at the 2 hour, you can see the 2 hour is starting to come down a little bit over. You can see that this is going to break through that support because the 2 hour is heading down right when it got to that support. Does that make sense?
Yes.
So most people are putting their buys on the support level here because they're like, yeah, Calvin said there's a support zone, so it's going to bounce. And honestly, it's not Calvin Hill's fault. He just knows how to chart, and charting is different than trading. Right? He can tell you where support is, he can't tell you whether it's going to hold. What I teach you is how to tell whether it's going to hold or not. This isn't going to hold because we know the 2 hour is heading down, but more importantly, if we look at our moon indicator, it's also heading down, right? So we know there's no money, and if there's no money and there's a blue moon, what does that mean? It's not going to hold support. That's pretty much the gist of it.
Yeah, those indicators very good. We see.
Yeah, yeah. I mean, we're making them better. I've been working on them. I tried to do more work on a few. I just like I said, I've been this injury's been terrible, man. I can't even. 3 days I slept standing up in a like on a wall. Terrible, bro. I could man. I thought, dude,
Oh, yeah.
it was so much. I mean, I'm a big man. I'm a strong guy. I've never broken a bone in my life. Played a lot of sports. I tell you what, I was crying. I shed a tear.
Yeah.
It's like when you got a sciatic nerve, man. This thing on my back, down my butt, my front leg, my right leg's numb. Oh my god. I mean, it was like the first night, dude. It was so much pain, like I shed a tear. I was like, wow, this is terrible. And I thought about it. I was like, some people live with that. I'm like, oh my god, there's no way. Yeah, but I'm getting work done. But I was just, whew, yeah, I got I got to go see a really on TikTok. There's a guy called the Ring Dinger where they stretch you out really nice. I go see him on Wednesday. So that'll,
Oh, yeah.
yeah. So that'll be, yeah. I'm going to the best, bro. I'm not playing around. I'm telling you,
Let's help it.
when I had a tear in my eye, I'm not. I'll spend anything not to cry, bro. So, but now that you understand, like how we can once we know what everyone's seeing, support and resistance, and everyone's trading a channel or a cluster, we can look at the moon indicators in our RSI and know what the probability is of what it's supposed to do. And then we trade into what it's leading into. That way, everyone else is hoping that when they see a cluster, they're like, "Oh, it's going to go up." I mean, in 50% of the time it's not, but we're not guessing, we actually know.
Mm. Mm.
And that's the difference of implementing. So once you've seen the 1 hour changing and you were like, oh, it's in a cluster, but now it's in the 1 hour, then you know to start buying the bottom supports because that's going up.
Yeah.
And now you just look for 1 to be the resistance, 2 to show you support, 3 resistance, and then you buy the next support zone and then you ride that up because you're watching it develop into your 2 hour your RSI and your 2 hour moon, and now you know that your normal trade. You know what I mean?
Yeah.
Yeah. Does that help you out there, brother?
Yes, very good, VC.
All right, man.
Thank you.
Yeah, absolutely, man. So I'll put this will be on YouTube as well. We can go back and watch it. And like I said, I'm gonna go back and then go over breaking it down to where the bullet points of it, and then we'll kind of go from there. What's Joseph Johnson? Will Bitcoin ever come back, bro? I mean, what is Bitcoin at? 80,000, 82? I mean, we were buying. Jeez. I mean, the bottom was 16,000. So we were putting 50, 60, 70,000 dollars in at 20 grand. I mean, there's an asset that's sitting at 80,000. That's 2040. I mean, what we did a 5x on it. So, I mean, I don't know how much more we want from Bitcoin. I mean, shit. If you put 100,000 in, you're up a $500,000. So, I mean, I don't know, how much you want Bitcoin to go up, but you have to say to yourself, well, if Saylor has all this money in it and all the banks are buying it, I mean, how far can it go? I mean, there's only so much money. I mean, I think, like I said, 2021, that Bitcoin's high max is 120,000, and it hit it this year. So, and because the first max was 60, 63, 69. Then a big pullback, you're going to double that. That gets you to 120. But we're still about a very small amount of people investing in Bitcoin. But there's a lot of coins out there, a lot of technology. So until the market, and this is why they take markets and they get rid of a lot of, opposing, stocks. Back in the day on the crypto boom, there was, you know, 15 companies that were all trying to be the internet, and the only one, and Internet Explorer won. So right now, you know, if Bitcoin would be in a really good position, Solana and all these other XRP would be in a good position if people weren't buying stupid meme coins all day. You know, like I watch people, they're like, "There's this meme coin, Santa Clausulisagus." They're like, the last coin last year went to 100 million market cap, and I'm thinking to myself, like, then what? What did it do after that? Went to zero. Like, what's the point of buying a meme coin that could go to 100 million market cap at 3 million? What's it going to do? I mean, there's no point of it, man. But that's like another game where you're trying to buy low, sell high, and people just love to gamble. But you know, at the end of the day, eventually the people that are in the space right now are just degenerates, gamblers, and they're going to keep buying meme coins, and it's going to take about 2 years for people to come over and start buying Bitcoin that are investors and smarter people. So Bitcoin will come back to 120 in the next year and a half, 2 years. But right now you're solidified with a bunch of gamblers, and that's why I trade Solana and Doge. But yeah, Bitcoin will come back, but it's going to take a little bit of time, guys. You got to realize there's only so much money. But in the meantime, we will short the market and make money as it goes down. We appreciate Bitcoin. Up and down, baby. So as long as there's money in the casino, guys, we are happy. So yeah, I'll make a bullet point on this, brother. I hope that helped you out, man. Anybody in Discord, if you can hear me, you have any questions on that? Does that make sense? Is that we'll do a little more of a breakdown on it and get the bullet points out of here. But yeah, so I enjoy the academy, trading guys. Who's in Discord, man? Yeah, because the system's unbelievable. The reason why I did making trading easy was to lower the leverage to where people could still be successful with 10, 20x leverage and limit the losses. So for you, changing the way you move your stop loss so that way you lose less, that'll help you get your gains up, and you can start. And then once you realize over the next 10, 20 trades that you're constantly track how many times you hit 30% out of those 10 trades. And if it's 9 out of 10, increase the money and then keep doing the same thing you're doing, except set your target for 30%. Does that make sense?
Yeah.
Yeah. And then that's pretty much it. Because 30% on $2,000, $600 a day. So if you do 2 trades a week, you'll be all right.
Yes, or one every day or something like that.
Yeah. I mean, I'm not mad at you. But I'm just, you always live in the basis. Go ahead.
Yeah, I will try a little bit tonight, I think.
Mm-hmm.
So
yeah,
I will try to trade a little bit tonight. So
yeah, just track it, man. See how many times you do your 30%. If you're getting 8 out of 10, then that's now it's time to increase the bag and just keep executing the same trade that you're doing.
Yep.
You know what I mean? What up, Ed?
Yep.
I see Ed hanging out. Bud, what up, Bud? That makes sense to you guys? All makes sense? I'm going to hop off here in a second. We'll go back and we'll get some video on this. But, yeah. Simplicity and how to, improve. Like I said, this will be on TikTok. We'll go on YouTube. We go back and watch it. But I just want to explain to you guys, like, it's always good to know what the game that you're playing so that you understand what everyone's doing and why it's happening. And then once you see why it's happening, then you don't get emotional and panic because you have the tools necessary to know what's really going to happen. So once you know what the results, then you just make the moves accordingly. All right, guys. Anybody else in Discord got something to say? Bud, what you doing, man? Ed. But yeah, we'll set up a little more. Let me go back and then I'll hop on again tonight and we'll do another boot camp tonight. And we'll recover what we kind of went over here. And then we'll go from there. All right, guys?
DC,
Yeah.
I'll wait for the second boot camp tonight, but you're probably not going to remember, but maybe you will. At the very beginning, you pulled up your charts and there was like all these notes for like the cluster and, anyways, I want to, next time, can you show us that again? Because I'm going to screenshot all your notes.
Yeah, I know. So we can, let me see. I think that was on the 4 hour, right? And that was on Doge.
It's all the stuff that you teach, but I just liked the way you had it up there.
Yeah. So today, did you like kind of understand what we were covering there?
I got kind of busy today, so I was in and out, and I plan to watch it again.
Yeah, go back and watch it because it's it's still in line with the support and resistance, but it also gives us a breakdown of like he had his steps down when he's entering, what he's looking for. He avoided the pullbacks. I mean, so everything was perfect.
Yeah, it sounded like a great call, so I'm gonna watch it again. Thank you.
You're welcome. All right, anybody else in there? And I'll go back and pull that in there. Thanks for the follows, guys. TikTok, don't forget, go ahead and follow. We'll be on later on today. If you guys want to hop up here and get in and do some talking on here as well, we can do it on TikTok as well. So we'll see you guys a little bit later. Appreciate your Discord. We'll be back on a little bit later. And we'll cover everything. Later, brother.
Yeah.
All right, guys. We're going to wrap this up.